The war in Iran has been heating up, not cooling down, unfortunately. But while some people are panicking, the reality is that there's always opportunity if you're looking with the right mind, okay? It'll destroy you if you let it, these kind of geopolitical bumps in the road. But in every crisis, there is opportunity, which is what I want to talk about in today's video with you, because I want you to have the information that you need, but also the right mindset that you need to succeed in times of turmoil, okay? Let's get into it. So, Iran has just broke the global energy market. It's true. It's true. Oil at the time of recording is trading over $100 a barrel. Okay, we've hit $119 two times. These are crisis levels for the price of oil. Some saying we could go as high as 150. That's the Qatari minister. Saudi minister saying we go to 180. Some even saying we're going to $200 oil. And let me just tell you, really bad things happen at 150, 180, and 200, okay? These are not good scenarios. We're talking huge disruption to supply chains, economies, recession, stock market crashes, all that kind of stuff, okay? But it's bigger than oil. Oil is, of course, the one everyone talks about. But 20% of the world's liquefied natural gas is currently offline, okay? 12.8 million tons of LNG per year offline. Qatar's Ras Al Khaimah is the world's largest LNG facility, been struck multiple times. This is a big story. It's not just that, also helium. 1/3 of the world's helium, which is used in all kinds of stuff like semiconductor manufacture, also offline. It's a big story. Fertilizer. Come on. It's a lot of stuff here, guys. A lot of things come into play. And the natural gas story in particular is a very hard-hitting one and not getting enough attention because it's so hard to replace. Creating liquefied natural gas requires major facilities. It's not quite as easy as oil. Qatar Energy has hit the emergency pause button on all LNG exports for the first time in history. European gas prices have surged 35 to 50% in a single day this week, largest move since the 2022 Ukraine war. Asia is scrambling. Asia relies very heavily on this liquefied natural gas. Japan, South Korea, India, all very dependent on energy coming out of the Persian Gulf. Inflation, unfortunately, is making a comeback, which is a really big problem for investors. Okay, that's not me making something up. This is what happens. When inflation goes up, markets start worrying because interest rate hikes are probably coming close behind. We saw the US PPI in February go up 0.7%, which was double the forecast at 3.4% year on year. Okay, not great. All of this stuff had been coming down for a while, and then we've seen things starting to slowly grind back up. And with the price of oil basically doubling in the last month, this has a very real world impact on basically everything. The cost to drive your car, the cost to buy your food, everything that needs to move from one place to another. Anything that requires electricity or energy, it's all affected, which is basically everything, right? I guess if you just, your hobby and passion in life is just taking rocks out of the river behind your house and just sitting there looking at them, you might be okay. Everybody else, oh boy. The Fed currently hawkish, holding rates at 3.5 to 3.75%. The new Fed chair, Kevin Warsh, has not been confirmed yet. Jerome Powell's tenure at the Fed is up in 2 months' time. We're getting close. That all being said, even if K-Dog Warsh gets into power at the Fed, if inflation is spiking, he may not be able to cut rates as he would like to. It'll break too many things. Reserve Bank of Australia has hiked rates. Bank of England holding. ECB pricing in 1-2 rate hikes this year. Energy, of course, will be the big equation, spiking inflation, which will cause interest rate hikes globally, which will do even more to seize up the economies. Okay? Not good. Every central bank right now is trapped between rising inflation, raising rates, and lower growth. Here in the high-stakes world of Web3, crypto, your IP address is a homing beacon for doxers, hackers, and wallet drainers. If you aren't masking your connection, your entire digital portfolio is a target. ExpressVPN is the essential security layer for every serious crypto trader. And here's
the edge. Execution speed. In a market where seconds decide your PNL, ExpressVPN's premium servers and lightweight protocol deliver the fastest speeds to minimize trading lag. Wallet privacy. This is really important. This shields your identity from ISPs and data brokers who log and sell your activity, preventing them from linking your physical location to your on-chain moves. I bet you didn't even know that was possible. Hardened security. Public Wi-Fi is a playground for hackers. ExpressVPN uses best-in-class encryption that would take a supercomputer billions of years to crack, keeping your private keys and your seed phrases under lock and key. It also gives you global DeFi access, so you can use the virtual location feature to get around some regional blocks and access the free open internet from 105 different countries. So for all these reasons and more, I always use a VPN. Scan the QR code on the screen or click the link down below me, and for less than the cost of a single gas fee on Ethereum, you can secure your gains before the next big cycle. You can even get 4 extra months exclusively using my link. Go check it out.
So, you understand, okay? There's a lot of very, very big risk. 3, 2, 1. So, okay, look, you understand, you get it. Inflation's a risk. Interest rate hikes a risk. Maybe we don't get any interest rate cuts. Oil prices going up is bad. War is bad. Disruptions to major things like LNG and helium. It's all bad, bad, bad. But where do most people get it wrong? Well, mistake number 1, panic sell, move to cash. The time to move to cash was a while ago. If you're selling your Oracle or whatever, your MicroStrategy is down 60, 70%, can they go lower? Of course they can. Are they likely in accumulation stages? More likely than not. We'll see. If we enter the new Great Depression, all bets are off, right? Major coins, ETH, Solana, XRP, Bitcoin, they're all down 50 to 70%. Can they go lower? Of course they can, but probably not that much lower. So that brings us to mistake number 2, freeze and do nothing. When the recovery eventually happens, things are going to bounce fast and hard. So now you're getting a chance to accumulate at prices that you probably would have cut your left nut off 6 months ago to buy at. Well, here they are. And most people aren't buying. I've been buying different stuff, MicroStrategy, Solana, a little bit of Bitcoin, all that kind of stuff. Mistake number 3, chasing the pump. Just because the overall market is down, it doesn't mean there will not be outliers. Okay, but don't go chasing things that have already rallied massively. You're probably just going to be someone else's exit liquidity. We're still in a downtrend in a bear market until proven otherwise, which means that a lot of rallies will happen, but they will get faded very quickly. Okay, so don't be the one caught holding the bag in that situation. So just think smartly, okay? If something's up 100% in a week, maybe you wait a few minutes, right? Now, so that's what people are getting wrong. Let's talk about the phases of how this conflict plays out, how conflict in general tends to play out. So first we get the shock phase. The volatility index spikes, 30, 35, 40, whatever. Gold and oil spike. Tech tanks the hardest. We've already gone through this part of it. We already saw a lot of repricing in tech due to the AI apocalypse narrative coming out. Second phase, we're here, repricing. Markets start pricing in the actual economic consequences, not just the fear. Everyone's starting to wake up to the reality, holy shit, what happens if oil goes to $150 a barrel? What happens if it goes to more? That fear is setting in because people understand the economic consequences of a $150 barrel of oil, quite simply, okay? Will the Fed be forced to keep rates high due to oil-driven inflation? If yes, risk assets stay under pressure. What if they hike interest rates again? Then phase 3, the rotation. So what are the winners? Energy infrastructure, defense, gold, pricing power companies. Be in position before the rotation is obvious. There'll be a lot of winners. There always is. There's always a bull market in some asset class. You just have to figure out where the hot ball of money is going, okay? So what are some potential winning moves? Own the LNG toll collectors. So the U.S. is now the world's largest LNG exporter. Qatar's gap is America's opportunity. So here are some public listed companies. We're not telling you to buy these. It's not financial advice. We are just giving you educational information here so that you can know what's actually going on in the market and where the opportunity could potentially lie in the market, okay? So Cheniere Energy, Venture Global, Next Decade. These are all LNG producers out of the United States, and the demand for American LNG will be red hot, okay? Because Europe and Asia are now scrambling to redirect long-term contracts toward U.S. exporters. making potentially a multi-year structural shift, not just a trade coming into play. Because once they've shifted over to buy US LNG, yeah, they'll probably buy the Qatari stuff in 3 to 5 years when they get their LNG factory back online, assuming it doesn't get drone bombed even more and messed up even more and take even longer to fix. Sure, they'll buy Qatari LNG again. The demand for that energy will definitely be there. But it's not to say they're going to cancel their American contracts. These guys have been signing 5, 10-year deals. Defense. Defense is always a tricky one for me. Don't really like investing in arms companies personally. But look at Palantir. Palantir's objectively an evil company. But it went up like 20x. Do you want to be right or do you want to make money, right? Anyway. Government budgets are going big time into AI and into tech and hardware, obviously, for defense, right? So structural plays, things like Palantir, autonomous drones, things like Ondas. Now, look, government backlogs exist typically around 7 to 10 years, which is revenue visibility that most sectors envy, okay? Maybe we're going to need more weapons for rearming NATO and stuff like that as well. So there's a lot of structural things in place that could see the defense industry do well. Things like Lockheed Martin as well, maybe worth paying attention to, Boeing, etc. Gold for the long term. Now, as Ray Dalio says, you should have 5 to 15% of your portfolio in gold. I guess I need to get some gold, Ray. Anyway, the geopolitical paradox 2026, when conflict drives inflation fears rather than deflation, the dollar outperforms gold short term. Long-term case, though, is still intact. JP Morgan's 6,300 year-end target and Deutsche Bank's $6,000 still stand, but timing matters, okay? Gold miners, if you want to get more leverage, if you feel like you're late to the gold move, maybe gold miners are more worth paying attention to. When gold rises 10%, miners typically rise 30 to 40%. But these are more for patient long-term holders. And look, a lot of the publicly listed gold mining companies are, let's say, not great investments, right? They're really small cap stuff. But if you get a small cap one that ends up exploding, I mean, yeah, fantastic. For me personally, I'd rather just play it safe with something like an ETF or just going for some of the big cap mining companies just to play it safer versus trying to go for some of these like, $20, $50, $100 million mining companies nobody's ever heard of. Those are a lot riskier, in my opinion. It's more like investing in a meme coin, hoping that they strike it rich at some point with one of their gold fields that they bought. Anyway, if you're going to build a gold position, long-term time horizon, guys. Okay, this is not an overnight trade. We wrote 12 to 24 months here, but honestly, think of decades. Can you hold your gold for 2-3 decades? You're probably going to do very well in that situation. Pricing power. In an inflationary environment, the company that can raise its prices without losing customers wins every time. Warren Buffett. The OG. Pay attention. Pricing power means the company's costs go up, but so does its prices. Margins stay intact. So high gross businesses, Apple, luxury brands, central healthcare, enterprise software. The inflation loop, high oil equals high input costs. Only pricing power companies can survive the margins intact. So avoid commodity-dependent manufacturers, low-margin retailers, and unprofitable software companies in that situation. So what is going to happen? That's the big thing now. Will Trump taco out? So that's the Trump always chickens out trade. Or will we see massive escalation? Iran's not giving up. Okay, Iran's ready for this. They spent 50 years preparing for a war with America. Here it is. It's happening. They have no way. Their entire leadership's been killed. The new guys that come in, they know they're going to get killed too. And they'll just keep finding new guys. America can keep blowing them up all day long. They'll keep finding bodies to fill the positions. Okay? So Iran's not giving up. So can Trump even taco out of this one? And if he does taco, doesn't mean the Iranians taco. They can still put a lot of pressure on the Strait of Hormuz. Just America say, we're done, we win, yay. And then they sail away and forget about the Middle East for a while. And then Iran gets away with all kinds of crazy. Don't know how likely that scenario is. Escalation. Will America just push the pedal to the metal here and just go scorched earth on Iran and just keep hitting them, deploy ground troops, take islands, take territory? Place your bets, ladies and gentlemen. Place your bets, because that is essentially the situation we're at right now. One of those two things is going to play out. There's going to be a de-escalation. Maybe there's a third path where both sides can de-escalate and save face somehow, because neither side can just give up because the political impact is too high for them. Anyway, regardless, there's always opportunity in a crisis. I hope that you can see that. Thanks so much for watching today's video, and I will catch you back in the next one. Peace.